The stock market is a rollercoaster of emotions, and the Dow Jones is on a winning streak. But is this rally sustainable? Stock futures remain steady after a positive day on Wall Street. As the New York Stock Exchange buzzes with activity, stock futures are holding steady on Tuesday night, following 2 consecutive days of gains for major market indexes. The Dow Jones Industrial Average futures inched up, while S&P and Nasdaq 100 futures showed minimal movement. A volatile trading session ends on a high note. Tuesday's trading session was a wild ride, but the U.S. stock indexes closed in positive territory. The Dow Jones soared by over 660 points, marking its third winning session in a row. Tech stocks played a significant role in this rally, with Alphabet reaching new heights on rumors of Meta's potential partnership. However, Nvidia's shares took a hit, shedding more than 2.5%. Market analysts weigh in. The stock market is attempting a recovery from recent declines, indicating that investors are still eager to buy on dips, said Clark Bell-Lin, a prominent investment officer. He noted that the recent pullback was relatively mild compared to typical corrections. But here's where it gets controversial. Bell-Lin also suggested that a significant catalyst might be needed for the market to reach new highs by year-end. Fed's next move keeps investors on their toes. Investors are closely watching for catalysts that could influence the Federal Reserve's interest rate decision. The CME Fed Watch tool reveals that traders anticipate a quarter-point rate cut in December with an 85% probability. Meanwhile, Treasury Secretary Scott Bessent hinted at a pre-Christmas announcement from President Trump regarding the next Fed chair, with White House official Kevin Hassett gaining traction as a potential candidate. Hassett's appointment could potentially lead to a push for lower rates, sparking differing opinions among market participants. November blues for the stock market. Despite recent gains, November has been a challenging month for stocks. All 3 major U.S. indexes are on track for monthly losses due to concerns over high valuations. The S&P 500 and Nasdaq Composite have dipped by approximately 1.1% and 3%, respectively, while the Dow has slipped about 1% so far this month. Alphabet's remarkable rise. Alphabet, the parent company of Google and YouTube, has been on a tear in November, closing at all-time highs on 13 occasions, including 3 consecutive days. This surge is partly attributed to excitement around its Gemini 3 AI platform. In the past month, Alphabet's stock has skyrocketed by over 24%, and its 3-month and 6-month gains are equally impressive at 55% and nearly 100%, respectively. However, its 14-day relative strength index, a momentum indicator, suggests the stock may be overbought. After-hours trading highlights. HP Incorporation. Shares plummeted over 5% after the company announced job cuts and provided disappointing guidance, despite beating earnings estimates. Urban Outfitters. The retail stock soared by roughly 17% in after-hours trading, thanks to strong third-quarter results that exceeded expectations. Dell Technologies. Despite missing revenue estimates, Dell's shares rose nearly 3% as the company predicted a stronger fourth quarter, fueled by AI sales. And this is the part most people miss. Will the Dow's winning streak continue, or is a market correction looming? What's your take on the Fed's next move and its impact on the economy? Share your thoughts in the comments below.